Can the stock of Skechers, the once red-hot footwear company that missed Wall Street sales and earnings estimates 5 weeks ago, causing its stock to lose 30% of its value in a single session, start roaring higher again? When we checked in with CFO David Weinberg right after the quarter, he stood by his long-held business is good and will stay good mantra. He indicated that the company was on track for continued growth going forward, suggested Skechers could double its revenues over the next 5 years. And to be fair, a lot of the problems with that last quarter were one-time issues, although some of it had to do with, yes, the super freaking strong dollar, and that ain't going away anytime soon. Still, Skechers has a long track record of terrific execution, and these guys are very competitive, which makes me think that they'll do everything in their power to avoid having to report a second disappointing quarter in a row. Plus, after plunging down to $25 a couple of weeks ago, the stock appears to be bottoming and now rebounding, trading up to $31 as of today. Oh, and just as a reminder, the stock is indeed up 71% for the year. So now that we've been through Black Friday and Cyber Monday with the holiday selling season fully upon us, why don't we check in with Robert Greenberg, the chairman and CEO of Skechers, and David Weinberg, the CFO and COO? I had a chance to sit down and speak with them at their Midtown Manhattan showroom earlier today. Gentlemen, we are now through Black Friday. We are in the smack of the holiday season. Robert, how are we doing?
Wonderful.
Worldwide? U.S.?
Wonderful. Got a lot of stores all over the planet, comped up double digits for the week plus. You know, and that to me is the snapshot of the whole brand is how our stores do, because they are Skechers stores, and when they do well, the brand does well everywhere.
Okay, David, you told me last time we spoke that there was a speed bump, and you said yourself, look, not everything can work out in a straight line. Are you happy with the progress since we spoke?
Absolutely. You know, October started off slow, as we had spoken about when it came through. But November is so strong now, and we actually had a very, very good month. And our comps everywhere are mid to high single digits for the month. We had good sellouts. We had a great Singles Day in China, which was more than double last year. So everything is moving along and pretty much on target. If December holds up, we'll have a very good month considering the way retail is in the United States.
People were concerned about that 32% down to 12% domestic, just something that periodically happens in retail?
Yeah, I think we shipped well in the second quarter,
right,
and things slowed down, and there was an ending inventory in September. We had a very good July. We had a very good August. September slowed down a bit. It was more macro than anything else. Right. Fourth quarter, obviously, will hold up well, and international is not a big contributor, so we're really looking forward to the first quarter when we get the benefit of our whole international business.
Okay, now we've got perhaps the biggest entertainment event of our lives, which is the new Star Wars. You're ready to capitalize off it?
We happen to be the shoe licensee for that, fortunately.
And will we see it in every store, the rollout? How does it work?
Well, it's actually the first character license we've ever had. And we actually are in both markets. We sell it unbranded without no Skechers on it in the mass market. And for our customers, it's Skechers Star Wars. And I just saw the selling for the week, this last weekend, and it took off.
It really is what people want.
It's really taken off. You know, I only hope that it lasts, you know, all through next year. That would be just wonderful. But
sometimes you're hostage to department stores. Your own stores were just on fire. Department stores, you said they had some clearance issues. Are we through that? Because when I look at the department store numbers and the mall company numbers, they're still not what we would have liked.
Yeah, I don't know that they're all through it. They're certainly, I would believe, in better situation than they were going into September, but it could take them a while to clean out. But like we said, it's always to our benefit, because when it's clean, we will take more shelf space.
Let's talk about the real growth story. It's very easy to get caught up, and I know people do, in this week and that week and this month and that month. I'm thinking about how China is going to be a billion-dollar market for you. And I know that people, when Starbucks said it was going to be big, people said, you know, they're a U.S. company. I'm not going to buy it for that. Same thing with Nike. China has the ability to be the second largest market, maybe one day the largest market for you.
Absolutely. Starbucks is in 95 cities in China already. They got almost 2,000 stores. They're opening 900 more stores in China next year. Can you imagine how many people in China have money to spend that kind of money for coffee? And they're not even coffee drinkers to begin with. I think it's a miracle, China. And our business in China, our association with a wonderful joint venture that we have, We've got one deal with one group alone that's going to open up 1,000 stores in 5 years. And that's one of 3 groups that are opening stores.
At the same time, I know some people would say, listen, why don't they offer dividend? They've got so much cash. Why don't they buy back? I'm looking for a long-term growth story. There are companies that buy back stock, and that's terrific because they don't have any place to invest or they don't have any new ideas. If you have new ideas and you have places to invest, I want to see growth.
Yeah, and we're all about growth, and we'd rather grow first, and we never want to be capital constrained. We'll worry about how to do that or return to investors somewhere down the road. We think the best gift we can give investors for Christmas is continued long-term growth over the next 5 years.
There have been some issues in European distribution. You had said that you were going to work through that. 2016 not going to be an issue?
Shouldn't be an issue at all. It depends how big we grow. Listen, we can outgrow anything because when we get hot, we get extremely hot. We'll have our third piece of the building out. We'll be at 750,000 square feet, so we'll certainly make up some of the inefficiencies. And by April, we'll be 1 million square feet in Belgium and should be as efficient as we can be. And I hope we outgrow it sooner rather than later.
I think that when you say hot, a lot of people don't get that. Just doesn't mean they're flying off the shelves. It also means that you actually have an average selling price that goes higher. Highly unusual for anyone in retail.
I don't think that's unusual in the sense that we're basically an athletic shoe company, and if you see the prices of Adidas and Nike and New Balance and Asics out there, we've got so much room to raise our prices. They're at 120 for something that we're at 60 and 70,
right, that's a good point.
And there's so much growth here. We've been just taking it up slowly, but it's a comfortable way to grow it because I don't want to upset the apple cart, so to speak. But there is so much room to get bigger.
Well, that's important because all we hear is, once again, it's promotional, it's promotional, it's promotional. Promotional means that you're selling at a much lower price. That's not what Skechers is doing.
Not at all. Well, we are a marketing company in the footwear business. Right. And, we do unseen, untold, unsold. We make a lot of noise.
What's new? What are we, that your designers, I know we're at this beautiful showroom, the designers are coming up with things for 2016 we haven't thought about.
Well, they're always coming up with something. Right. The thing is, it's very difficult. It's a question we get often, but it's difficult to talk to in the chair. That's why you'll take a walk around with Robert and you can see what's going on around, because we have 19 or 20 divisions now, and they all have something new, and they all have something to develop, and they're all growing. So they grow at different rates in different parts around the world, but we have something for everyone and something in each room, and it's constantly growing.
We also are the only company in the shoe business that's both an athletic shoe company and a shoe company.
Do you think that this notion of short-term for Wall Street versus the viewers who watch my show, I'm trying to get people to understand that we should not be thinking quarter to quarter, but you're business people. The quarter does matter. How do you look through it? How can our viewers look through it for the greater good?
I think it's just like anything else. You have to look for the opportunity, and everything is price sensitive, and you will look to see who's hot in the marketplace, who could be replacing you, what strength you have overseas. Nothing's ever a straight line. And I think we have as much runway as any company in our industry, so around the world. And we've already invested in the infrastructure, so we will leverage everywhere in the world as our time comes. So if you have a short-term headwind with currency or macro pictures, so long as we continue to build a business, we'll reap our rewards as we go forward.
Well, and therefore, at this same point, I'd be remiss not to point out your award by Footwear News, not given very easily, Lifetime Achievement, for someone who's not thinking about the next 3 weeks, but is thinking about the next 30 years.
Yeah, that's everybody tells me that it's a great award that I got. It's like the Academy Award in the shoe business, which I think is kind of sweet. And a bunch of sweet people. Manolo got the award, and Vince Camuto got the award, and Stuart Weitzman. So I'm number 4, which is my lucky number. How much better can it be than that? But when I listen to everything you guys talk about, the strength of our company is our factory base. I just returned from Asia, and I just visited a lot of our production facilities and groups that make shoes for us, and how much we've taught them. And that is the strength of our company, is the quality of the product, the comfort of the product, and our factory base is everything.
Well, there it is. That's not a quarter-to-quarter phenomenon.
That answers that question
exactly
about
right.
That is long-term.
Even though it's a lifetime achievement, we all believe as best is yet to come. So stay tuned. It's not lifetime not over yet. We got a lot of ways to go yet.
Agreed. Thank you to Robert Greenberg, who's the chairman and CEO of Skechers, and to David Weinberg, who's the CFO and COO. Great to talk to you, gentlemen.
Thank you so much.
Jim.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.